let me guide you through the first real chapter of this Capital Market Day, our update of the strategy. And this chapter will provide a bit of a framework for the rest of the discussion we have with all the colleagues here on my right-hand side. So let me start with things that remain unchanged from our point of view, how we want to develop DEUTZ over the next years to come. So first of all, we've created that mission, that buzz sentence, we ensure the world keeps moving. And it's important because we feel and felt that how our people, but not only our employees, but also our customer, are touched by this sentence because it's a strong statement which holds together what DEUTZ is. And but important is how are we defining, how are we underlying our way forward? And we've defined for us three, from my point of view, quite simple criteria which really define this path forward, how we describe it later. So first of all, it is a growth case. Maybe on a first glance surprised that a diesel engine company claims to be on a growth case, on a growth path, but that's, and you will see that in a few minutes, is really what drives us. It's a growth case. And in order to grow, obviously, we cannot grow only with what we have today because there are challenges out there. So we need to find areas where we can grow successfully, where we have, to say it in the words, not only a right to play, but also a right to win. And for that, we need to have a relevant portfolio, which means we need to further develop our portfolio. And I don't mean only a product portfolio, I mean also a business and a company portfolio. And that, when we talk about relevance, we mean here based on the one hand, the capabilities we have as DEUTZ, because we've got quite a lot of them, but also the requirements from out there, from the market. And we develop by ourselves, or we acquire, we buy, where necessary and appropriate. And given the high dependency today of DEUTZ of business cycles, like we feel right now, we want to create a much more resilient setup. We want to create and further build a company which is significantly less dependent on the business cycles. And it's not only from a market point of view, it's also from a supply chain point of view. We will hear that from Petra later. We also cannot be dependent too much on individual suppliers or areas of individual suppliers because we cannot expect stability around us in order to be successful. So we are, and we expect, we are sure that we continue to be in an environment which is super dynamic. And by being dynamic, it offers quite a lot of fantastic opportunities for us to grow in a profitable way. And we just picked these three, let me call it mega trends, because they fit very well to our business model and our future business model. So first of all, and most of you have seen that before because we've used that picture in the last 2 years, but first of all, urbanization and population growth. So the population worldwide will grow. At the moment, we expect it to peak in 2080, 2085. And yes, growing population, growing urbanization, that's good for us because more people on that world, you know, more buildings need to be built, more people need to be fed, agriculture, infrastructure need to be built. So it's important to be part of that. And climate protection and energy mix may, on the first glance for a company like DEUTZ, look a bit like a threat, but actually we consider it an opportunity because it allows us to innovate. And as we see in the context of energy supply later, it also allows us to play in areas which fix challenges of the climate, of the energy mix. And last but not least, digitization. Well, we're not a digital company. We want to become a bit more of a digital company like we are today, but this is certainly not our USP. But we benefit from these trends because material handling, very important market, particularly in the United States, but not only there. Well, obviously, that will grow because of e-commerce and other aspects as well. When we started that journey 2.5 years ago, we defined 3 strategic horizons. And I know we're not the first company to define 3 strategic horizons. a lot of companies do that. But I'm quite proud to say that after 2 years, we still see the same strategic horizons, and we can prove that we progressed on the first strategic horizon. But let me recap. The first horizon we defined at the beginning of 22 was Horizon 1, surprise, strengthen the base. Because we knew when we looked at what we found, the company is not in a position to really grow because our numbers were all over the place. We saw it earlier. On a good year, we had 4% margin. On a bad year, we had -4%. That's not exactly the basis to grow a business, right? Now we are in a situation that in a not so good year, we had 4%. Better, but I come to that later. So we need to improve performance in order to prepare ourselves for growth, for profitable growth, in order to, to focus on the right areas to invest. And back in 22, we said then there's going to be a second horizon, broadening the base, really to continue building on the solutions business, realize M&A and all these aspects. And then we talked, and beyond 23, we're becoming sustainable. That was a long shot at the beginning of 22. But I said, we assessed now and we said we're on the right track. More than that, actually. Because we can say with conviction that we've strengthened the base successfully. And let me prove that based on our 3 blocks, like we announced them 2 years ago. Classic, we completed first steps of market consolidation. Just an example, the Rolls-Royce Power Systems acquisition, well, Markus will guide you through later. We entered new market segments. And at the end, the bottom line is all that counts. We were at more than 6% margin in Classic. Service, we announced the beginning of 22, 600 million top line in 25. I remember very well, I mean, we said that to you guys, to the outside world, but when Markus and myself, at that point, there was just the 2 of us on the board, said that to the inside of the company, they said, this is impossible. Everyone said this is impossible. Well, we said, no, it's possible, and we're on good track. And why is it so important? It's not only about the top line, it's because this brings such a strong part for the bottom line. We do not make the margins on the service business public for good reasons. It doesn't help you to put it in your models, but we also don't want our competitors and customers to, know how good that business is. And on the green side, we did significantly align the portfolio. We sold Torqeedo, and the overall story of Torqeedo was for DEUTZ not a success. I mean, I think it helped us initially to initiate change at DEUTZ, but from a pure investment opportunity, it wasn't a success. On the other hand, we heard it from Oliver earlier, selling a business that brought us 25 million losses last year for more than 70 million is not exactly a bad deal. But important now, after we fixed that past in green, how we position ourselves for the future. And here it's important that we now focus on products and areas where we truly have not only a right to play, but also a right to win. And that's not an easy question to be answered, because here sort of the environment is most unclear. And I'm looking forward to hear later from Bert how we are approaching that very, very difficult and challenging but opportunity. But if we now, or when we now look at the second horizon, and that's, what just started, because we initially said the second horizon, the first horizon goes to 25. Well, we are in October 24, and we consider the first horizon completed. So now let's go on the second horizon. So a year ahead of schedule. If we look at the second horizon, one thing is important: we need to grow the company because size does matter. Size does matter. 2 billion company with that margin profile we have right now, we want to grow significant. And I think if you see that chart, I mean, the first key message is we want to grow by the end of this decade, by 2030, we want to grow the business to 4 billion. That's quite an ambitious task. But we see it realistic as well, and we will guide you through how we see it realistic in the next hours. But it's not only about growing from 2 to 4, it's also from changing the structure of the business from very cyclical to less cyclical. We will not eliminate cyclicity. That will not work, and that's also not what we want, because it's okay to be in a partially cyclical business, but not not have too high dependency. So looking at 22, the majority was cyclical, construction equipment, agricultural. In 24, we see roughly, it depends a lot on obviously the recovery of the core market and the classic business, but roughly 2.4 billion. And then it's important, you know, to grow and to grow with a growth rate way above the market growth. We'll guide you through how that works, to grow in classic, service, and green. And we want to ensure, and I'll show you how in a minute, that we push into new business models. Because with the existing business model, we can't achieve an 11% CAGR, of course. And in the end, we'll measure everything we do against the 3 criteria I introduced earlier: profitable growth, having a relevant portfolio, and a resilient setup. The other thing we started in 22 is our strategic dialogue. It's a structured strategy process which pretty much tries to combine 2 influences. On the one hand, how does our environment change? And when I speak about changing environment, I mean the change of technology, developments and disruptions, because we are in a field which is heavily affected by disruptions, or which could at least heavily be affected by disruptions. Then obviously, how does the economy grow? How does the market grow? What are geopolitical developments? Because 24, the geopolitical situation is different than it was 22, particularly before February 22. A lot of things have changed since then. And very important, what are the customer needs? Some of these are aligned, others not. And then on the other hand, look what we have as DEUTZ. What are our capabilities? Because we have a lot. We should not be shy of what we have. We have a very strong engineering expertise, and we know the applications. We can help our customers to bring drive systems into their applications, and that's why the customers like us for. We do have a customer focus, and probably, although we sometimes feel like, oh, the big Cummins is so much larger and stronger, but what customers sometimes tell us, well, you're not as large, but you're more looking into what we actually need. I don't want to consider ourselves a niche player, but sometimes, you know, we are very good in things which others overlook. And let's not forget the brand. DEUTZ is a strong brand, worldwide. Sometimes, like with lots of German engineering or industrial companies, the reputation and the strengths of the brand abroad is better than within the country. But that applies, I think, a lot to German self-perception. We do have a strong footprint, not only on production side, but also certainly on sales and service side. And we do have committed teams. Let me spend a few moments on how we see the growth prospects in our classic business, in particular on our markets. And it is a mixed picture. So our core markets, our core segments, construction, material handling, agriculture, these are the 3 big ones, and then the rather smaller segments, pumps, compressors, ground support equipment. I mean, what we see here is how does the diesel engine grow or shrink, depending on the color, over the next years. And of course, that's a status as of today. Maybe in 2 years it's different. I can tell you 5 years ago, everyone was expecting a much quicker shrinking in some of these businesses. So that's changed over the last year. It may change again. So it's important to never accept this as the ultimate truth. That's a position we see right now. And what we can share, what we can see is, well, at least until 2030, the whole picture is not very red or orange. And that's, you know, I think, Markus, you can confirm that from all the customers you talk to. At the moment, most of our customers want commitment of DEUTZ to provide diesel engines, at least into the early 2030s. Does that give us confidence? Yes and no. It would be dangerous if it gives us too much confidence, because this could imply, oh, we don't need to change anything. But important is we need to reassess that situation. But at least for us, it's safe to say for the time being, we expect the classic business to remain at least constant or grow, and to position ourselves as here an active consolidator, as we show later. But beyond 2030, things may change, and beyond 2045, for sure things will change. I mentioned a few minutes ago the strategic dialogue. So with a strategic dialogue, we look on these market and customer needs. We look at our own study as well as others. And then typical iterative model of the strategic process, we play with our regions, with the knowledge we have in the regions, with the knowledge we have in the central functions, in order to define the strategy in our existing business, but also in potentially new businesses. And one of our main implications out of that strategic dialogue process in the last years was, well, twofold. We need to strengthen our existing business, but also we need to establish and live a structured process for identifying and implementing new businesses. We call them strategy speedboats. And what does it mean? How does it work? When we define out of a strategic dialogue a new business model, we do not automatically integrate it into our global organization. Quite the opposite. We establish small teams driven by our strategy team, but also from our organization, wherever this idea came from. So we don't need to align long term, because that's what kills innovation typically. Huge alignments between functions, between regions, and once you're aligned, someone else has taken the opportunity. That happens a lot. I think you all have heard of that. The larger the organization, the more difficult. So here it maybe is quite good that we're not as large as other really large companies. And it's important, we expect results in short time. Only that only works with a pragmatic approach. And of course, when a strategy, a speedboat, becomes really large, we're very open to reintegrate it into existing structures where it makes sense. That's important, but we want to really give it the opportunity to kick off. The criteria are very clear. Not be surprised. Profitable growth, relevance, resilience, and a right to win for DEUTZ. And this is not just pure theory, we've applied it. Because our first successful speedboat was our entry into energy. It came out of the strategic dialogue. In 22 and beginning of 23, we learned from all of our regions, oh, this is a field we should be in, but we weren't in. Then we said, all right, how do we enter into this field? Which products, which region? And in that case, we defined the US, and we'll hear that later, as a sort of pilot area for that. And then we conducted, well, before we conducted a target search, we looked, do we build by ourselves, which would have taken 5-6 years, we assessed. And then we said, oh no, this takes too much time and we would lose too much opportunities. So we rather go into an acquisition. We conducted a target search, due diligence, and within fairly short time, we completed the acquisition of Blue Star Power Systems. And looking at the criteria, it's a fast-growing business. CAGR about 15% in the last years and expected to continue. It's profitable. The EBIT margin is above 10%, actually quite substantially above 10%. Again, we do not disclose this in detail. And the portfolio is relevant because it's very closely aligned to the question of energy transition. And it uses combustion engines as well. So we've got a knowledge of that. And the setup is certainly more resilient than everything else we have. We heard about the resilience and the market expectations probably in about 1 hour or so. The lessons learned are quite important out of that strategic dialogue. First of all, the market potential is more than sufficient for us to continue to grow profitably in our today's core business, classic and service. And that's encouraging. The second lesson is the market demand is currently still lagging for our green business, at least there where we have a right to win in larger off-highway solutions. Because it's not enough to just say, okay, we compete against 500 other companies in battery electric solutions for small applications. That won't work. But there are areas where we have a right to win, but the demand is lagging. So here we defined a rather long-term and flexible approach. Not all in, but not all out. But definitely more focused than ever before. And there is sufficient potential to capture additional value by having right business and becoming really a solution provider along the value chain where we see high growth, for example, like driven by the climate change, as well as geopolitical developments. Main focus is energy, but we'll also speak about a structured approach towards defense. And based on those lessons learned, now we're entering into the second horizon of our strategy. We will realign our Dual Plus strategy. Not reinvent the wheel, but really broaden the base. And you see it here on that chart. There's a small but relevant change. Classic remains, service remains. Green isn't eliminated, but it becomes part of solutions. I will explain what that means now. So first of all, repeat or reaffirm, let me say it like that. We continue growing the classic business based on performance and consolidation. Uptake the margin, grow the top line, including inorganic growth. I go to the bottom, to the service part, further expand the service business around the world, but also now going more into new business models, doing something new. Markus will tell you later about that. And that's the really new part, expand our solution offering into, for the time being, energy and new technology. That's what we call formerly green. Energy, we'll hear David later. New technology, we hear Bert later. And potentially beyond. 2 years ago, we didn't know there was energy to come. So maybe in 2-3 years, we'll have a new field which we develop. So we want to expand our value chain coverage. We will invest and all focusing on growth and long-term viability. So what does this mean? What does that mean in particular? On classic, continue the consolidation game or the consolidation approach. We want to grow in segments and power ranges where the dependency on the diesel engine is longer and higher than it is in the small power ranges. We need to also align our engine portfolio, become more cost effective, that's clear, and also to access pockets or markets which enjoy a high growth, such as defense. And of course, driving performance. And we'll hear from Petra later. With new business models, our partnership with the Indian company TAF is a good example, but also making our production setup more flexible in order to have the right answers for the cyclicity of the business. In service, and that's the first big number we're happy to announce today, we grow the business for revenue level of 1 billion by 2030. We have a fantastic worldwide footprint in service already, but there are still white spots. And also, the business we acquired from Rolls-Royce Power Systems is a great business, but it does have white spots in service. So it works a bit like the other way around. The new engine business is very strong. The service business is small and not so strong. So here we leverage it with our existing strengths in service. And mentioned it earlier, expand also into new business models, so further intensify third-party business and digitization as one of the rather sort of long shots. And solutions, well, clearly saying, capture value which is beyond engine and service. But we want to go in business where we have a right to win, where we cover the value chain more in depth than we do in our sort of tier one business we're currently engaged in, focused on the new tech offerings, and also the second big number, expand the energy business to 500 million revenue by 2030. This is our 2030 ambition with a couple of important milestones. So today we're at 1.8, it's the current guidance. 25, we see us around 2.4, depending very much on the recovery of the classic business. Why is there such a big jump? Because the Rolls-Royce Power Systems business we only acquired in August, as well as the Blue Star Power Systems business we only acquired in August. So a large chunk of that growth is by simply getting the full year impact in that. But we'll see that later in all the details as well. And we want to continue here the growth to the 4 billion I mentioned earlier. And we see the classic business, well, that's fairly stable, a bit of a recovery, a bit of inorganic growth, but we do not plan here, or we do not assume in this plan, significant inorganic consolidation topics. If something like that happens, that'll rather boost. But here we are assuming a fairly stable development. So obviously the overall contribution of that business to the top line decreases to 50%, a bit more. On service, we want to continue having a good 25% of the overall revenue in service, but obviously 25% of 4 billion is the 1 billion I mentioned earlier, and not the 520 we have this year. And then the strongest CAGR comes out of solutions. Well, not a surprise, because we have the zero or the smallest baseline here as well. But with the acquisition of Blue Star, we contributed already quite significantly on that. You see it's somewhere hidden in the middle. This is why we make it more specific. We also update today, or not update, we introduce our new midterm targets, because our old midterm targets were 25. Well, now 25 is next year, so we'll now introduce our new DEUTZ midterm targets for 28. Sales to 3.2 to 3.4 billion euros, margin 8 to 9%. And dividend, and that's also an adjustment, we want to commit ourselves to an upward trend, upward trajectory. We want to be at least stable. Ideally, obviously, a growth story in dividend, but if we can, we grow. If we have a difficult year, we want to become stable, or we want to remain stable. We'll come later throughout the day to all, the individual contributions of classic, service, and solutions. And while today is the focus on looking back in the first horizon and looking ahead in the second horizon, so we're not talking about a third horizon beyond 2030. I think this goes beyond being serious in models and so on, but at least we want to give an indication that our story doesn't end in 2030, but rather continues. And remember, 2030 is where we want to become as DEUTZ sustainable. So yeah, there's going to be a structural shift. And that's part of the transparency as well, that in classic, we will expect at some point a drop-off in volumes, especially beyond 2035. So the overall market will decline. We want to gain market share, but at some point there will be decline. Everything else would not be wise to say. So that's why the arrow goes down. But on solutions and service, the arrow goes up also beyond 2030. Solutions, the new technology, energy business, we will continue to grow. And also service. First of all, there is the sort of Havana effect that the combustion engines remain in the field way beyond 2030, but also our new offerings, whether it's going to be hydrogen or other products, will also require service going forward.